please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Bell, there goes the bell. And it's an absolutely flat start. 9 points, 10 points down on the Nifty and about 40 down on the Sensex. Nifty at 998586 is the first tick. And for the Sensex, it's 32,560, the first tick. So, well, absolutely flat. The Bank Nifty and the mid-caps, at least, okay, flitting in and out of the green and the red, the other two indices. But actually, overall, the comment on indices is that things are as flat can get. Giving the positive hue to the markets is Tata Steel, actually. I think the Credit Suisse report was unambiguous that things will improve for steel companies. So that's starting with about a 1% uptick. So Adani Ports, Yes Bank, ONGC, Indiabulls Housing. Those are about the 1%ers, if you please, or between 0.75 to 1%. The pharma stocks are doing reasonably well. Cipla, Sun Pharma, Aurobindo in the green. Among the banks, ICICI and SBI are starting with a green tick, and bringing up the red end of the markets is ITC down 0.9, BPCL, HPCL on expected lines down 0.6 each, and among others in the red, Kotak Mahindra Bank, it's not joining the other private banks. Axis Bank also in the red. Coal India, Tata Motors, Dr. Reddy's, all on expected lines, mildly in the red. Very, very flat on the index.
Very flat on the mid-caps as well. So just mildly in the green right now. The market breadth is split right down the middle. It could go either way. In terms of individual stocks, Indiabulls Real Estate is reacting up almost 3.5%. After that deal that took place with Blackstone. So now gaining more ground, 3.5% higher there. Tata Power is the other one. Let's just take a quick look at Tata Power. Yes, up almost 1% after selling stake in the Tata Sons arm for 2,100 crores. Cadila, a lot of upgrades coming in, from a bunch of brokerage houses. But not just that, Cadila has also got an approval for a chest pain tablet. So that is the other thing that's spiking it up. Cipla is the other one in the news, as we just told you a while back. So up almost about 0.2% there. Dr. Reddy's is down about 0.3%. A couple of more stocks. Bhushan Steel was the big mover last week as well. It's up about 5.5% today. And a couple of these gas-based stocks like Gujarat Gas, etc. are doing well. So that stock is up almost about 3% odd. Otherwise, for the market, it's absolutely flat, just gravitating around the 10,000 mark on the Nifty. Not moving too much either way.
Oh yeah, not moving too much, but will be interesting to see if this kind of opening is actually sold into. If you take a look at the advance decline, that's opening in favor of the advances. So mid-cap index is doing well. Ashwani, your thoughts on market opening, and is there a first trade now?
See, I would like to sell this gap up, and at some point we should expect that the market will come off. So this is a good opening if you want to be short. The trend remains down, so I don't think there's much to worry if you go short here.
Okay, not much to worry if you go short here. Sudarshan, for now it's flat, but the mid-cap index is actually picking up a tad bit. Anything that you've noticed in the frontliners or in the mid-cap space that deserves a trade now?
Yes, two mid-caps for buying. One is United Spirits and the other is Godrej Consumers. For the Nifty also, I'm a buyer, except that I would like a dip somewhere around 99.70. If it comes about, that level is good enough for me to go and buy that.
Okay. Mitesh, anything on your radar now?
So I think, I highlighted Raymond's, Lata, in the morning. That's now sustaining below the 200-day average, so that's a sell call. And on the buying side, I have one stock. I think Exide is looking very interesting. If it holds 214, 213 levels and manages to get past 218, then I think 230, 235 can happen.
Okay. All right, gentlemen, I'm sure we're going to keep coming back to you. The call is sell the gap up. That was Ashwini's call. Though, of course, if you remember, for a positional trade, Sudarshan thinks that he has done the selling he wants to do. Those are the two views, one intraday and one for the longer term. We'll keep coming back to all of you. Thank you very much. Now, before we invite our market master, we want to present a CNBC TV exclusive. And this is important because stocks are going to pay attention to this. We learned from banking sources the JP Infra's Committee of Creditors, that is bankers, meeting, has asked bidders to probably revise their offer. Ritu Singh is joining in with all the details. Ritu, what are you picking up?
That's right. JP Infotech's lenders, the sum and substance really is that they are not happy with the bids that have been received from Kotak, Cube JV, from the Suraksha ARC, from Adani Group and from JSW Group. What the banks have to say is all of these bids that have come in for JP Infotech are conditional bids. None of them offer to settle the issue of home buyers or the farmers' compensation around the land that is owned, in the JP Infotech, JP Expressway area. What they also say is that the bids are very depressed. For instance, take a look at the value of the land that is being offered by the bidders. Before the company even went to NCLT, if you remember, JP was negotiating with banks for a land swap in lieu of debt. At that time, the valuation offered was 8 to 9 crore rupees per acre of the over 6,000 acres of land that it held at that time. Now, of course, the land that it holds is roughly 2,500 acres left of it. And the bids that have come in now are in the range of 1.5 to 2 crores per acre. It's a huge differential from what was offered before. Therefore, banks are asking all of the bidders to really revise and relook at their bids, because at the current state, none of these bids are acceptable to banks. There is a COC meeting today where all of the bidders will be urged to relook at the offers if they want to stay in the race.
Okay, Ritu, thanks a lot for that. Well, of course, the stock to really watch out for here is JP Associates. That's the one which, should technically benefit if, there's any kind of
if the resolution happens, they would benefit so that they don't have to pay the 2,000 crore, the buyer may.
Exactly.
But now this drags both these stocks into a prolonged delay in terms of resolution.
All right, let's invite our market master then. Sridhar Shivram, Investment Director of Enam Holdings, is with us now. Sridhar, good morning.
Yeah, good morning.
So
Thanks.
Answer this million-dollar question for us. Is this still a bull market correction or start of some kind of bear phase?
Yeah, so I would say it's still like a bull market correction. We haven't seen any correction last year. Globally also we haven't seen a correction last year. So I would say but we haven't had the exact 9-year bull market that the US market has had, because we've had our own choppy sessions in between. So I would say it's a healthy correction that was broadly required. We're back to 10,000, which we hit in July. So that's almost 8 months of market move is gone. And in the interim, we've had patchy earnings. So I would say, and plus many news flows which are not great for the market. So I would say it's a good consolidation that the market needed. And there was irrational exuberance, as one says, in the market at various pockets. Some of them have corrected very fast. So I think it's great. It's a reminder for people that this is not one-way street. And we've seen markets for 20 years. We see this very often, but many of the investors who've come in the last 3 years haven't seen this at all.
Okay, well, Sridhar, just a counter theory whether one should worry about this. The Reserve Bank, actually the SEBI moved first asking people to declare their default disclosures, and it looks like the Reserve Bank stopped that and put in their own version, asking that first-time default itself should be treated with resolution. The point is there is a very strict NPA recognition and therefore provisioning norm lying ahead.
Right.
Does this have the potential to keep markets lower for a longish bit?
So I think this entire banking cleanup we are seeing almost for 1.5 years now, and I think we are towards the end of the cycle now. I've had the chance to meet, at least 7 or 8 bank CEOs over the last 15-20 days. And I think the broad sense is that most people, or at least the markets, have already factored a lot of this as NPAs, because these are either recognized as restructured or in some other name or nomenclature that some of these banks disclose. So it's only a question of moving from there to the actual NPA and maybe some increase in provisioning. Our stance to most of the banks was, please do it in one shot in the March quarter itself. However, as it seems, most bankers don't seem to be wanting to do that, including some of the private sector. So we would have been happier if everything came in this quarter and F18-19 would have been a normalized year. But as it is turning out, I don't think that is going to be the case. A lot of it will be recognized in the first and second quarter of next year also, which is something I'm not very happy with, the way the banks are going about this. So I think it's only
my point is, what is the impact on generally the markets itself if, say, bankers don't lend, or if they have to quickly recognize NPAs and
so I think
therefore bad
quickly
news keeps
recognizing
coming.
NPA, in our view, is not an issue because investors like us and many of the others have already treated this as NPA, and we adjust our books. So I don't see that as an issue. My issue is this lingering along and continuing for a much longer period of time. And the other thing, as you mentioned, lending, that I think has, especially on the PSU side, many of the lending activity has, I can say, probably has 90% come down substantially because approvals are becoming much more stricter. So there's an opportunity for private bankers and NBFCs to step in and use this as an opportunity to gain market share. So I think the PSU loss of market share will only accelerate from here. Speaking to many companies, I mean LCs or some sort of letter of credit or any of the other forms for exports have significantly come down. I mean, even if it's a AAA rated company, banks are not even giving these, or it is taking, if it was taking 2 days earlier, it's taking 1 month.
Okay.
So I think those are the challenges some of the companies are facing.
Okay, that point is taken. Sridhar, hi, good morning. What role do you think the spike up in crude will play in dragging the markets further down?
So India's macro has significantly deteriorated. So if we go back, say, 3 years to where we are now, we are seeing inflation inching up, even though it is still within the RBI band. We are seeing our current account deficit moving up. And also we are seeing interest rates from RBI signaling is moving up. So I think the sweet spot that we were in during the last 3 years has surely moved away. But having said that, India's some of the best bull markets have come when our macro hasn't been great. So India is really a micro story. And if I look at the micros, I'm seeing some of the micros really improving. So you look at CVs or you look at tractors or you look at two-wheelers. Generally, the numbers that we are seeing, we are seeing much more positive numbers as far as micro is concerned, whereas macro is deteriorating. So I have no debate that our best of macro is behind us. And I think it's already had some impact in the market. It depends on how RBI takes it forward from here.
No, both of us are only asking you whether, what is the kind of downside you see in the markets?
So Lata, it's very difficult to say what will be the downside for the market. In general, our belief is 18 is a tough year. And not to expect too much of returns. In fact, we are currently underperforming the emerging markets by almost 10%. And as long as we hold some range in the market, somewhere in this range, say plus minus 5 or 10%, that should be a good outcome. Keep in mind that we still have many uncertain events ahead. We have a e-way bill which is starting from 1st April, which a lot of people tell me is slightly disruptive. And then we have some elections which are coming. Normally elections don't have long-term impact, but it does come up with short-term impact. So, and some of the experts tell me that we could have a Lok Sabha election in November. So I'm not an expert on that, but if those are the things that are playing out, 18 has many uncertain events, and we've had a great 17. So if I put all those things together, this looks like a tough year, and protecting capital will be my paramount, objective right now.
Oh yes, that 17, of course, was the year in which the mid-cap index itself rallied about 45%. So imagine what portfolios would have done. By the way, just keep an eye on Adani Power. There's a press release or on the exchanges with the fresh pledge creation of 4.3 crore shares. That's a big pledge creation. So obviously, there's a bit of a problem in the Adani group right now, and with regard to their liquidity, etc. as well. So just keep an eye on that stock. But so let's talk about. You said it's a micro story. One story which has played out is a lot of money has moved from large cap financials to IT this year, and in fact in the last quarter of last year as well. Do you reckon it's just a valuation adjustment trade, or are you sensing something big here?
So I'm not a big fan of IT because I think the Indian IT companies have really missed the bus in terms of getting into the new level of cutting edge technology, be it on the artificial intelligence or machine learning, any of those. And when I look at Chinese counterparts who were nowhere, suddenly have market caps of 10 billion, 20 billion, who are in the specialized technology space. So we may not like when you say it's body shopping, but look at the way H1B visas are applied for. You know that this is like a labor arbitrage that is going on. And look at the NASSCOM numbers, it's 7 to 8% growth. So yeah, so it is for a value investor, there is some opportunity here. But normally, global investors don't come to India for value investing. I could buy Accenture or IBM for the same price. So if you ask me, I'm not a big bull on Indian IT. yeah, there is some value and you could play that. But on a structural basis, if you ask me, I'm not bullish on IT.
I just want to come back to that point you were making about the e-way bill rollout.
Right.
What's the feedback you're getting? What kind of hurdles do you think it could pose?
So, if you look at the way e-way bill is structured today, if I'm a company, I'm moving my own good from my factory to go down, I need a e-way bill.
Yeah.
From my go down to my distributor, I need a e-way bill. So there are too many, your documentation that is required.
Okay.
Today, with the lack of e-way bill, there's a complete free-for-all. So if you see one of the reasons why we haven't seen increased collection in GST, when I speak to people on the ground, corporates, that the unorganized actually gained. So the whole thesis was organized will gain over unorganized. It's been the opposite. Unorganized has gained because there's nothing, there's no stopping anywhere, there's no checking. So it's complete free for all. So now to correct that, the government is going a bit more stricter on the e-way bill. They've tried it twice and they've had glitches. So in my view, this will have some issues, at least in the initial phases. For the first 1 month, we've seen this that in the past 2 attempts, the systems were not great. So this time they're trying to do only interstate, and then they'll come with intrastate. Okay. I do anticipate that this will have some issues, but over a longer period of time, this is great. But in the short term, when we're already grappling with many of these issues, this may not be great when you see companies complaining that we're not able to move goods.
Okay, and just adding up all the pledges created by the Adani Group, it's fairly large. Pledge of 7 lakh shares of Adani Enterprises, 1 lakh share of Adani Transmission, those are the smaller ones. Adani Ports has created for 91 lakh shares, and Adani Power is the maximum with pledge of 4.3 crore shares. So it's big time pledging of shares by the promoter. In various places, it's Gautam Adani himself who has pledged his shares, clearly indicating that money is hard to come by, and probably that is why the pledge is being created. Big stuff here. Well, finally, you said your move in the current scenario will be to protect capital.
Yes.
How do you do that? Which shares?
So as I said, this is very bottom up right now. So you can find good companies with strong earnings growth visibility. So that's a broad thesis with which we work. So there are enough sectors, like one of the sectors that we like is on the road construction side. And having met some of these companies over the last 3 months, what we've seen in the last few months and in the next 3-4 months, there's an expectation of huge amount of orders which are on the pipeline. And some of them are in advanced stages. We're already seeing every day we get announcements of road companies getting orders. So we do like the road space in particular. And there is similar stuff in some of the engineering companies. Consumer durables is one of the spaces that that we like. Generally, consumer in general, and of course, the private sector banks is the other space that we broadly like.
Okay, you did in fact, mention that there has been a pickup as far as CV and tractor sales is concerned. So our next guest joining us is one of the market leaders, the market leader in that space. So thank you so much for joining us, and I encourage you to participate and listen into the conversation if you want. One sector that will be a big beneficiary of the government's rural push is the tractor space. We speak to the market leader in this space to find out more about the growth prospects. Of course, a whole host of other issues as well. Dr. Pawan Goenka, the Managing Director of Mahindra & Mahindra, joins us now to talk about that. Dr. Goenka, good morning, and thank you so much for joining us on CNBC TV 18. I wanted to start first with the tractor growth story, because year to date things have looked very good. For M&M itself, it's been a 19% growth, and you have in the past spoken about an 8 to 10% growth for the next year as well. But given that the things are looking so good, do you think you could outdo that projection?
Well, it's been a very good year, as you said, and as we look at the next year on back of 2 very good years, the normal growth in the tractor industry over a long term always has been 8 to 10%. So starting off the year to project a growth much higher than 8 to 10% will be difficult, but we will wait to see how the monsoon forecast comes up, and then we will have to look whether industry will surprise us or not. So right now we are going in with a view that the growth will be in the normal range, which is as low as 6 if the monsoon is not good, and as high as 10 if the monsoon is good. But we have had 2 very good years, and on top of that, to get a 8 to 10% growth will be very good third year.
Okay. Good morning, Mr. Goenka. This is also happening at a time when now metal prices have remained strong for the third year in a row. So, will you make as much EBITDA on this tractor sales?
Well, if you look at our performance during this year up to third quarter of financial year 18, we have managed our margins in spite of all the commodity price increases. Obviously, when volume goes up, it does help us to get a good EBITDA level because our fixed costs get distributed over a larger volume. So we have done quite okay up to now. What happens next year again will depend on many factors. Will depend on what the volume growth is. Will depend on what the commodity price increases are. Will depend on how much of it we can pass on. But overall, I don't expect a significant risk to our profitability unless we have some major negative surprise.
Mr. Goenka, good morning. But is there a risk right now? Because we have had 2 back-to-back good monsoon, and even though right now early indications from Met are that the monsoon should be normal, but given the kind of base effect that we have seen for the industry, is there a risk that this year, if things don't stay as good as they were for the last 2 years, there could be some decline in overall volumes?
Well, I would be very surprised if that happens, because we are going into the year with almost no headwinds. The agriculture output has been good, the MSP prices have been good, the government's focus on agri and rural development is unmissed and absolutely very high. And normally, and as you said, that the very first indication of monsoon also is positive. GST is all settled in. So I really don't see any reason why we should have a negative growth during this year. What I would say is that going into the year, because of 2 very good years, I don't expect to get another 20% growth here. I would right now say 8 to 10% growth is what we would expect on a normal monsoon. Could be a little bit higher, could be a little bit lower, but that's the range that we would talk in.
Okay, so that's about the tractor business, but let's also
talk... I should also say...
Sure. Go ahead.
I should also say that this year we are going to end up as an industry at the highest volume ever, 8 to 10% higher than the previous high, which was in financial year 13.
Okay, well, that's an optimistic view. You know, I wanted to also move towards the utility vehicle space, because very exciting launches planned over there in the compact SUV space. Now the larger SUV market is shrinking a bit and everyone's moved towards compact SUVs. You have an impending launch there as well. Tell us about the market and how it's growing, and when can we see the new launches?
Well, first of all, for the country, SUV growth has been phenomenal. In the last 2 years, SUVs have significantly outperformed the passenger car segment, and today constitute 28-29% of the total passenger vehicle volume comes from SUVs, which perhaps is amongst the highest in the world of any major auto market. And therefore, SUV players or SUV launches have been very high, and almost every other launch these days is SUV launch. Going into next year, I would expect that outperformance of SUV over passenger cars should continue. Perhaps the gap will not be as high as it has been the last 2-3 years, but it should continue. For Mahindra, we have, like you said, 2 launches, 2 major launches coming up, and also G4 Exton from SsangYong coming in as a high-end SUV. And therefore, we have 3 launches that will happen of new products during this year. And 2 of these 3 launches are in volume segment, and therefore we would expect to see a significant growth in our volume during next year. What happens to market share will depend on overall growth of SUV industry. So I cannot predict that, but what I would like to say with reasonable confidence that we should see a good volume growth for Mahindra and Mahindra in SUV segment on the back of these 2 launches.
Would you put some numbers to that significant growth, sir?
I would not want to project numbers, but all I can say is these 2 products are in high volume segment and can easily give us additional volume of 8 to 10,000 vehicles for the once both of them are launched. And 8 to 10,000 based on our current volume, which is about 20,000. You can sort of do a do quick math.
Okay, what about the Ford partnership? What kind of SUV launches are we looking at over there? Or if not SUVs, then sedans. How is it going to play out over the next, say, 6 to 12 months between M&M and Ford?
Well, we have had this alliance teams working for last 6 months to sort of pin down what are things that we could be doing together. And we have announced just on Thursday last week that there are 5 MOUs that we have signed to work on some specific things. The C SUV, as we call it, which will be a Mahindra platform on which there will be a Ford vehicle. That will probably get launched, the Ford vehicle, somewhere in 2021 or thereabouts. There is another SUV that we are right now working on to decide whether we should have a common platform. There is engine sourcing that's happening from Mahindra to Ford for some of the India products and potentially for their global products also. So lots going on in that space, and we are very happy with the way things are progressing right now. Of course, new product launches will not happen in the immediate future. It always takes 3 to 4 years, but a lot of things going on, all positive.
Okay. Well, let me come to the big sunrise product for you, the investment in electric vehicles. It is what, 600 crore in terms of investment and 12,000 vehicles capacity by September 2018. What does this do to the P&L, Mr. Goenka? Will this be a competitive product, or will you have to bleed for a year before you start making money?
Well, it really depends a lot on what others do in terms of pricing. As far as we are concerned, we believe that there is now the prices are coming down and the costs are coming down. And we believe that unless the market becomes irrational and unless there is abnormal price competition to grab volume, we should see a reasonable. I mean, I cannot imagine right now getting the same kind of margin as we get in our other vehicles, but we should start making a small profit fairly soon. Lot of the selling of electric vehicles will happen on tender basis, ESL tender. Okay. And on tender basis, as you know, that there is severe competition. So I think that we are over the situation of having to have a variable cost loss. And as we move forward, I would expect to start seeing little bit, very small margin coming into a variable cost level. And as volumes go up, and then we would see overall profitability. But I would say that at an overall profitability level, it will take 2-3 years before we can start seeing sort of positive based on the volume growth that we are going to see. And volume growth becomes very important, and competitive pricing becomes very important.
Sir, if I read the last statement from Maruti, they were going to launch only in 2020, wasn't it? So do you really expect irrational competition?
Well, there are many players who have announced their desire to come into electric vehicles. Some are already now here, and some have said 19, some have said 20. And there are some Chinese players also who are right now not in the passenger vehicle space, but in commercial vehicle space. So the space is going to get crowded.
Okay, I just had one last question before we let you go, Dr. Goenka. In terms of margins, in the quarters gone by, the margins have improved both for tractors as well as the auto segment. Tractors, I take your point about maintaining it at these levels, but in autos, is there scope of higher margins? Because even in not only in LCVs but in HCVs, MCVs, etc., now we're getting feedback that a lot of higher tonnage, trucks, etc., are getting bought. Even commercial vehicles, the higher sort of tonnage series is seeing more demand. So do you think you could leverage on that and see perhaps higher margins as well in the quarters to come?
Well, if you look at our sort of historical margin levels, we have more or less managed to maintain our margin, sometimes a little bit on improvement that we're able to get. Again, it depends on too many factors. Commodity prices is a sort of wild card going into next year, and we don't know what will happen with the commodity prices and how much of it we can pass on. Our effort obviously will be to try and maintain the margin for sure. And if we can, to increase it a little bit. But right now, for me to predict or to be able to extrapolate that we will get an increase in margin will be difficult to do. But that's always an attempt, always an effort for every automaker to increase margins. And I would say that we are doing reasonably good in terms of margins in spite of several things that happened during last year. For example, BS3 to BS4 problem in the GST transition. Also, we had a lot of loss of previous excise duty that was paid. In spite of all of that, we did pretty good in terms of maintaining margin.
All right. Dr. Goenka, it's always a pleasure having you with us on the channel. Thank you very much for dropping by today.
Thank you.
Okay, that's a positive statement coming in from the big man who knows the rural sector better than anyone else, and not too optimistic in terms of making money on EVs.
The important point is, he said, only if the monsoons are good, then you can look at 8 to 10%. Otherwise, it's still a 6% growth that he's forecasting if we have, you know, not so good monsoons this year.
So all those budget announcements will only add up to so much. Well, we have to take a break on that note. We are coming back and we have been speaking about this over and over again. Summer is here and perhaps one of the hottest summers in recent memory.